how to invest in private company before they go public, or even how to invest in startup companies before they go IPO, or in other words, how to invest in private equity. I want to give you a moment of silence of showing you real example of how and why you should invest. See that? In 2020, two very good examples is Palantir, data analytics company used by all those US agencies like CIA, FBI, probably something that you even haven't really heard before, and also the Ant Financial, like aka the Alipay, which is Jack Ma's baby. And the other example in the past is obviously Uber. Uber is in US now. At the point of its IPO, Uber was still losing money. But that does not mean that if you have invested in Uber before the IPO, it doesn't mean that you lose money. You could probably still make a very good money. And when I actually send these updates to my clients, to my investor, here's what they have to say. Now, when it comes to investing in private companies, in startup companies, or even in private equity before they go public or before they go IPO, it all boils down to these few points that you need to understand what it is and what it is not. Now, this is not peer-to-peer financing where you start with 1,000 ringgit and you invest into all those small and medium enterprise. No, that's not. We are talking about huge, scalable startup or private company worth billions or hundreds of millions, and that is disrupting the market, or they are creating a new market, a blue ocean from a scratch. We are talking about on a global scale, and these are the taiko in their own right. So you might be wondering, should you actually invest in all these private companies, startup or private equity before they go IPO or before they go public? Now, truth to be told, this really is the playground for the T20, top 20% people from Malaysian context, right? You probably are for high earning individuals or net worth, because T20, now this is the exact definition, or in most cases you're already an accredited investor, or you have tried things like stocks, unit trust, you have tried property, you have dabbled in Bitcoin, cryptocurrency, you have dabbled in robo-advisor, you've invested in gold, and then you ask, what is next? Now, if you are in the B40 or M40 category, this is not something for you. But it doesn't mean CFU channel is not for you, because I want you to check out how to get started in small steps, like things like robo-advisor or even stocks, right? Because in due time, when your net worth grow, your assets actually grow, you'll start to earn more, and then in due time you hope to actually move towards the T20 groups, right? And that is what CFU channel is about, is to motivate you towards a goal if you are not in the T20 category yet. And I have a free lessons which you can check out after this video end on the upper right hand corner, which you can check out to get you started when it comes to investing. So ask me, what is the minimum amount when you want to invest into these private companies, startup or private equity before they go public? So comments below. Now, if you don't mind your question are actually being seen and my answers being seen by others, just leave a comment below. But if you want to ask in private, check out the description below where I show you there is this insider group askcf.com that I'm running, where you could actually share more private details in a P&C confidential manner if you want to seek for any advice that is specifically catered to your unique situation. Also, while you are at it, if you are someone who uses Instagram, so also check out the Instagram account that I'm running. I post there probably every weekday, sometimes twice a day, short clips of what I'm reading and what we are doing when it comes to investing and all that. It comes to how I read at news, bite chunks information that's under 1 minute. How do we actually do it when our clients want to invest into these private companies, startup or private equity before they go public or before they go IPO? Now we are actually, as independent advisor, we have a platform that's regulated by Security Commission to invest into a portfolio of startup or private companies before they go public or before they go IPO. But this kind of opportunity is not open 365 days a year. it comes and it goes. So as and when it is available, if you're already a client, you know that I always send out updates to inform you if there is such opportunity that comes along. Now, as the only independent financial advisor in Malaysia with the largest following on YouTube and being engaged by top financial institutions like Maybank, RHB, and also Permodalan Nasional Berhad to conduct investment workshop, you know that what I'm going to tell you in this entire video comes from a practical, in the trenches experience, and not rehashing some Googleable contents like what other finance YouTubers are doing out there. So, how much can you make passively, no sweat required, from investing into these private companies or startup or private equity before they go IPO or go public? Now that depends on how much you invest, number one, and number two is how early you are investing into this company, like what stages of these companies are in. Now I want you to imagine this, right? If you are inside the very same room with the founder of Uber or even Jack Ma, back like more than 1 decade ago, when they first have this idea, you were in the same room and you just write a 50,000 check to them for an 18% stake of their company in the very early stage. So fast forward to 5 or 10 years, right? How much would a 18% stake worth when the company actually go public or go IPO at a valuation of 1 billion? You do the math. Now, likely, it's probably not possible for you to be in that kind of circumstances, but let's be realistic, right? If I throw this opportunity to you, and you know, somewhere in between, right, you are not, you know, you have this opportunity to invest into these private or startup companies in the middle stage, not in the early stage, but in the middle stage, right? Now the company probably already have gained some traction. Maybe it's already worth about 1 million after a year, and you invest 50,000 for a 5% stake in the company. Now in 5 years, if the valuation actually goes up to 1 billion, again, you do the math. But I know that not everyone will actually take up such opportunity because guess what? A lot of people are skeptical, and even very smart US entrepreneur and millionaires like Gary V missed making 400 million from Uber when all he had to do was to write the founder of Uber, Travis Kalanick, a 50,000 check because Travis was actually in the same room as Gary V when Travis first got his idea of Uber. Watch this.
I passed on Uber as an investor twice in the beginning. If I did my normal $25,000, $50,000 check, I would have made $400 million.
Also, don't forget to actually whack the like button and wallop the subscribe and the notification button or bell if you like what I'm sharing so far. So the next point is, how can I invest in private equity or private company or even startup before they go IPO or before they go public? Now you see that this kind of investment opportunity comes and go. If it is open, it will be only open for a limited time only, and that is how it works. Now you want to actually give money to Jack Ma, 50,000 or even 1 million, right, before he go IPO. You think he want your money? 1 million for him is kacang putih, right? So this startup private company, the very big ones, they want to go, want to go IPO and all that. Normally, if they're going to raise funds or raise capital, normally their target is not retail investor, not individual investor. They are actually targeting all those big guys like institutional investor. And by the way, even EPF, yes, EPF, KWSB, was actually already invested in private equity since I think early 2000. Yes, so your 5 or 6% return from EPF every year, now 2.5% out of it is actually the return is gotten by private equity. Then they are really getting a very good return from it. Now, so like this article really shows you already, because back in 2019 there's this private equity forum where all those big institutional funds like Khazanah, like PNB or KWAP, they are actually sharing their experience investing in private equity or those private startup companies long before even retail investors actually looking at that. So if you look at all these big funds, you cannot go wrong, right? Even they are actually investing into it already. So if you want to be in my insider group and you want to get informed when this kind of private equity investment is available for retail investor in a security commission regulated environment or platform, so I want you to check out the description below and check out how it works and all that. Now if you want to be informed, now I don't really publish the exact details of this publicly, so check out the description below how you could be a part of our insider group. So let me explain the big why any investor would want to actually consider investing in private companies, startup, or even private equity, right, before all these companies go IPO or go public. Number one is you have to understand these companies are it belongs in a specific asset class, and that is called a non-market correlated asset class. So unlike your bonds or even stock market or even property market, it is based on supply and demand, right? The price actually fluctuates, every week, every day, and all that. So there's volatility over there. But when you invest in these private equity startup companies and all that, it all depends on the company valuation. That is how you actually make your big payday. The price does not fluctuate day by day, and it is not even correlated or have any correlation at all with the daily fluctuation of the price in the stock market or property market. Big money is made when you invest into an asset class that is off the radar for most retail investors. Agree? When people are not looking, right? That is where you make your big money. It's not when people are already looking, they're focusing on that. It's already chilly hot, like top growth stocks or Harta Lega stocks back in 2020, right? So you still want to jump on the bandwagon? Maybe you can still make money, but you're actually chasing the price because everybody is actually focusing on top growth. You ask your auntie, uncle, or even your barber, they would say, well, I know, I invest in top growth, right? They have no investing experience. Also, you ask a monkey, also they can tell you invest in top growth. But private equity or investing into startup company is where the big monies are made. Abu then, why you think Datuk Seri Nazir Razak, in 2018, he quit from being the chairman of CIMB, right? And he's being paid like so in 7 figures or even 8 figures a year, right? For working as a chairman for a multinational conglomerate like CIMB. And why he actually left his cushy job and set up his own private equity firm. He was reportedly worth hundreds of millions according to Forbes, and that is back in 2013. The only reason is this. This is the asset class where big money flows and could potentially give investors an astronomical kind of returns that will even make multi-millionaires get their ass off their cushy chair and actually do the work. So here's the thing. You don't have to like me or agree with what I say so far, but I'm telling you the truth, right? That is how the game is being played. I'm like that good friend of yours who will tell you the truth, even though that hurts. I'm not going to sugarcoat it. I'm not like your fake friends that only shower you with praises and only tell you things that you want to hear. I'm going to tell you the hard, brutal truth, right? I don't aim. That's not my aim to be liked or to be right, right? But I aim to make you more informed so you don't make stupid money or financial mistake that you cannot recover from. I'm not here to entertain you, by the way. I'm here to make an impact, a positive impact, hopefully, in your life. For me, it's a very selfish reason for me to actually leave a legacy. So for people who are saying, all over my social media platform, people say I'm hypocrite, there's some trolls that are dropping, negative comments, scolding me and all that. I'm alright with that, right? But I know what I make over here in CFU channel. That is for you. If you are my true fan, this is for you. This is not for the trolls. It's not for the haters, right? If you are a true fan, click on the like button below. So if you feel turned off by this, by what I say to share with you so far, this is the time to actually click on the dislike button just below. Otherwise, just bang on the like button. Now, this investing into private equity or private company or startup before they go IPO or and public isn't without its risk. So I'm going to tell you what are the potential risks, right? So as you know, as an independent advisor, I tell you both sides of the equation, right? Not a salesman. So if the thing is, if you're invested in certain startups like WeWork that fail to actually go public or go IPO and eventually it go bust with valuation actually comes tumbling down, it could even cost smart billionaires like Mr. Masayoshi Son to lose a painful amount of money. And if you have invested in startup like Airbnb and all of a sudden a pandemic comes like a tsunami and that wipes out everything the startup has built for the past 10 years, then yes, you would probably lose money too. But if you are inside my insider group, check out the description below, then I can tell you how you can mitigate such a risk if you want to do it yourself. And the truth is, this is how the T20 groups, most of our clients fall in this category, invest their money in Malaysia. and outside of Malaysia invest their money globally, right? They get paid like at least like 5 figures monthly in their job or business, but they're very laser focused on doing their job or business well. And then they invest whatever surplus they have safely and passively into regulated instrument that will make them double or triple the money, right? Or even 10x the money, right? Within like 5 or 10 years. And then when that pot of money is huge enough, they only cash out and park that money into properties. So they don't really start with investing money in property. See, they might have, but most of them have a bad experience investing, directly into property. So here's the truth. Except the property guru themselves, the fact is 99% people who own a huge portfolio of property with infinite holding power didn't actually make their money from property investment. If you don't believe me, watch this.
Hear this, the wealthiest people in this country have not made their money through property. The wealthiest people in this country park their money in property once they've made it in their business. And the more cash flow you can produce in the business, the more valuable that business becomes. But what a lot of people do is they go, oh, I've got to invest in property because that's how you make money. And they get every single fucking cent they can out of their business and they pull it out and they put it straight into property. And these properties sit there going, chick, 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 and the business is like sitting there going, begging for fucking oxygen to grow, but they don't have any because you're sucking all the oxygen out and feeding into these fat fucking things sitting on a fucking curb. That's the truth. You want to get wealthy in this country? Fucking invest in your business. Put the money into your business. That's how money is made. That's how real money is made.
So the thing is, when you see people claim they have a 5,000 monthly salary, but they have a 10 properties, each generating like 500 per month of rental income, you have to understand these are the exceptions. These are not the norm. Furthermore, even if you have 500 net cash flow rental income from your property every month, you have 10 property. Yeah, you got like 5,000, no? 500 times 10, 5,000 of cash flows. Great. How is it going to be life-changing? Enough for you to retire, 5,000 per month. So if you already have, you can relate, you already have a problem in your property investment, right? Maybe your rental income is already downtrending, you cannot rent it out, and then it's so painful, you're not sure whether you want to sell it or not, or hold longer. If you want to sell it, then what should you do? How should you reinvest? I have a message for you over here. Are you unsure how much longer you should hold onto your worst performing real estate investment property, or whether you'll be better off selling it as soon as possible? You get tired of attending property investment seminar by property gurus who are still trying to convince you property investment is still as easy and profitable as 5 years or 10 years ago? Well, they might be right, or they might have their own agenda for saying so. Want a non-biased second opinion? I'm conducting an online web class this week to answer this burning question. You are also going to discover if your property is at risk of not able to increase your tenant's rental in the future. If you feel you are going to benefit from these out-of-the-box insider insights, click on the link in the description below after you finish watching this video, and it will bring you to a page that looks like this. No credit card required, but availability is limited. We get filled very fast. Seats are reserved on a first-come, first-served basis. Now, you want to understand losing money in property investment is not the same as losing money in your stocks or unit trust or even robo-advisor portfolio. Because when you lose money in your stock, unit trust or robo-advisor or even Forex or Bitcoin, you lost 20%, and if you sell it, then you still get back the 80% tangible money in your bank account. But in property, when you lose money, right, when your rental are becoming zero or negative, and then your property valuation is less than the outstanding loan that you have with the bank, you not only lose money, you also lose your liquidity. Example, even if your loan outstanding is 1 million, your property valuation or asking price is 800,000, and even you can sell it. Now that's already a loss. But what if you cannot sell? Right? Even if you want to sell at a loss, if you are not able to sell it, you will not see a single cent of money in your bank account. Think about that for a second. Did property guru actually give you this perspective or not? What? They never tell you what? The other thing is how to identify scams, how to differentiate scams when it comes to investing in startup, private companies, or even private equity before they go public or before they go IPO. So you see, I want you to be very aware. Beware. A lot of scammy investment out there are disguised and masquerading as private equity. You could actually lose your entire capital if you are naive or just plain stupid. So if you're watching this, do not be stupid, do not be naive. Ask me in the comment section below, what are the 3 exact questions you can ask to actually filter out the scams from the legitimate private equity investment? 3 exact questions. And
I tell you, I read and I reply to every comment.
3 questions. Now these questions are not even technical. You don't have to be a financial analyst or accountant to even ask this, right? It's just common sense question. You can do it even though you think you're not financially savvy. So 3 questions to ask: how to differentiate and identify legitimate private equity or investing into startup or private company, how to differentiate that between all those scams and all that out there. So I want you to comment, leave your comment below, ask me, I'm going to reply to you.